The goal of this presentation, or this Investor Outlook, is to help you understand what's going on in the market today. And at the very end of it, I'm going to be giving you some recommendations based on what's going on with my personal portfolio and what I'm doing in today's market to make sure we're capitalizing our return on investment and making sure we're getting that yield. As you can see, as we go through this slide, I'm going to show some statistics that I watch on a regular basis. These are the key things I'm watching that I make my major financial decisions on as far as real estate investing in specific markets. Now, even though I track a lot of the major markets that I invest in, this particular presentation focuses on the Arizona market, where, as many of you know, I have a huge part of my personal portfolio. But it also will outline what's going on in the Utah market, which is a neighboring state. I always think it's interesting to see what the neighboring states are doing. And also, as many of you know, I have a fair amount of my personal investments in the state of Utah as well. This first slide here, obviously, you know that I'm very focused on real estate as an investment, and I believe in real estate as a great investment asset class with some great opportunities. And in a survey that I read, over 90% of the world's millionaires, while they're invested in many things, attribute the biggest portion of their wealth coming from investing in real estate. So while I invest in a lot of different investment vehicles, real estate is my primary focus as far as investing and where I've got the majority of my return on investment. And it offers some great opportunity there. One of the first things that I watch is the Housing Affordability Index. Now, to me, this is interesting, particularly in the market today. A lot of my investment friends are saying, hey, you know, I don't want to buy anything in today's market because things are more expensive than they were 5-6 years ago. And my response to them is, hey, your grandparents were buying Cokes for a nickel and you're buying Cokes for $3.75 today. Why are you willing to pay more for a Coke today? And it all has to do with affordability. So with the housing affordability, what affects that is interest rate, median income, and median prices of homes. So while yes, I was buying homes cheaper 5-6 years ago than I can today, we still have to take into consideration what is the affordability of the investment today. As you can see the statistics here, the national average for affordability is 156.8, showing that across the country there still is some opportunity as far as affordability goes. An affordability index of 100 even would basically say that based on the median income, 30% of that income being applied to housing would be exactly sufficient to cover a mortgage payment based on today's interest rates. So anything over 100 would suggest that 30% of the median income is more than you would need to cover the mortgage payment. So here you can see that Arizona was still one of the strongest affordability indexes in the country at around 160. Now this is starting to decline a little bit as prices continue to rise, but you got to remember that income is increasing also. We're going to look at the unemployment rate. Unemployment rate's going down, driving demand on jobs. Income is going up. Interest rates are staying relatively low, while they may fluctuate a little bit. So creating an opportunity still for some great affordability. Utah, on the other hand, has dropped significantly. Over the last couple of years, it's been closer to that 160 mark where Arizona is, but it's dropped significantly. Prices have gone up considerably more in the major areas in Utah, pushing that affordability down. So this is something that we are going to continue to track and talk about. I suspect we'll start to see this number go down and we'll see prices appreciate at a slower rate. The next one I really watch is population growth. You know, it does me no good to know the affordability index or an area is super affordable, but if there's not an influx of people driving the demand on the product, then it's affordable for a reason. Well, in a market where the population growth is swift and strong and there's a lot of economic activity and growth, business growth in the state, pushing the population up and it's affordable creates the longevity of the market. So I can have confidence that the future of the market will be strong because the population growth and demand is high. This is one of the main reasons that I focus on Arizona and Utah as an investment opportunity, is purely from a population growth standpoint. Both of those states are doing a lot of smart things from a tax incentive standpoint to draw in business. We've seen a lot of big businesses like GoDaddy, Motorola, and a couple other big companies in Arizona growing their product, growing their presence, and Apple is one of them as well, because of what the state's doing to draw in those businesses, which is really increasing the job opportunity, which is also increasing the demand on housing, which is going to push prices up, but also create the longevity in the market. Arizona's population is projected to grow to 13.1 million by the end of 2050. Our current population is roughly 6.7 million, and we're projected to grow by 1.6% just this year in 2017. So there's some great future opportunity in that market. Utah as well, is, even though it's significantly smaller with only 2.5 million people by 2050, our current population is around 3. So the projected growth is 2.03% in 2017. So significant population growth in both those areas, which is actually impacting inventory significantly. We're going to talk a little bit more about that. Both states are more than doubling the national average in population growth. Very, very strong markets. Unemployment rate. It does no good to have all those people moving in if there's not enough jobs to keep them busy and keep them earning income and fueling the economy. So the unemployment rate in Utah is at 3.1%. Arizona is running at 4.8%. And the U.S. national average is 4.9%. So you can see both those states are beating the national average, which I like to see. Arizona is just barely beating the national average, but you got to remember that the pure number of people that are moving into Arizona on a daily basis, job creation literally can't happen fast enough to keep all those people busy, which they're doing a phenomenal job at. But that's the reason that it's closer to the national average. But again, both very strong markets, very low unemployment rates. And again, in addition to unemployment rates dropping, we're also seeing wages go up, which again affects affordability. You know, we see people making more money and being able to apply more money to more housing, which means they may have bought a house a few years ago. Their income circumstances matched the size of home they bought at that time. Their income is increasing, making them look to a new product. So there's a lot of opportunity there with the economy, with low unemployment rate, higher income, good affordability, even though we're not able to buy houses at what we were. And to be honest, I don't know if I'll ever in my lifetime see housing pricing what it was 6-7 years ago when I was buying houses so fast, but it doesn't keep me from continuing to add to my portfolio because of the affordability conversation. Inventory. Right now, inventory is so low. Month supply, national average is 4.4 months. Arizona and Utah are below 1 month of inventory, meaning things are disappearing or being picked up faster than they're hitting the market, which is again driving that pricing up. Here's something interesting. I pulled up a couple graphs. They're not shown here on this presentation, but I overlaid a graph of population growth directly over the number of building permits that were pulled over the same time. Well, here's the interesting thing is we all know that building slowed down after the crash after 2007 because all the governments were hesitant to continue building because that was part of the problem that created the bubble. We were building things too quickly. And while more product wasn't being built, those building permits weren't being given, they dropped significantly. Guess what didn't happen? The world didn't stop growing. Our population graph continued to increase while our creating new inventory did not happen. So I hear a lot of people now talking about a potential bubble that we're causing the same problem we had before. But the thing I want to point out is we're trying to catch up to all that population growth that has been happening over the last several years where we were not creating inventory for those people at that time. That is one of the reasons we're having such a huge demand on product right now is because we're behind on product. So to me, this creates not a bubble, but it's going to take us a minute to catch up by creating inventory. Now, they're doing a great job of catching up on inventory, but it's going to take several years. And the effect we're going to see is pricing is going to stay fairly high. We're going to see the appreciation slow down, though. We're not going to see these double-digit appreciations that we've seen over the last several years, but we're going to see some normalcy in the appreciation between that 3 to 6% that the government likes to see. The other thing I love about both Arizona and Utah is they're being mentioned in articles in Forbes and Inc. and all these other national platforms that are recognizing the strongest economies in the state. And Arizona is continually getting noticed as one of the strongest economies, one of the strongest housing markets, one of the most desirable places to live. So there's just a lot of great things going on in these markets that are going to create the longevity from an investment standpoint. So here's the real question with anytime we're looking at what's going on in the investment market is, what should I be doing right now? Should I be buying or selling? And we're kind of in a unique market because the answer to this question is it really depends on the goal of the investor. So right now with my personal portfolio, as many of you know that have come to my investment seminars, I own dozens and dozens of properties, and right now in today's market, I'm selling some of my inventory based on not only the state they're in, but down to the neighborhood of what that neighborhood has done in the past, how close I think it is to topping out, what I believe the appreciation is going to slow down to in that neighborhood, what kind of rents am I getting in that neighborhood compared to the price. So there's a certain portion of my portfolio that I am selling in today's market. But there's a significant portion of my portfolio that I'm choosing to hold on to for the long term. You know, in a few years, we may see a little dip in the market, nothing like what we saw. But I'm okay to ride these properties through the economy thick and thin because they're going to be tried and true cash flow for a long time. So here's the real answer to this question is there's a few things we have to consider when you're deciding whether it's time to sell your current investment or stay focused on the horizon and keep buying additional investment property. So here's a few things that you need to be considering. What is your current asset allocation? How much cash are you sitting on? How much do you have in the stock market, in other assets such as gold and silver? And how much do you have in real estate, and down specifically to how much do you have in different markets? 2 is location, location, location. Again, this is coming down to neighborhoods now for me of which assets am I selling, which ones am I holding on to? What is my personal required rate of return? This varies depending on what stage you are in life. You know, I'm still in my 30s, and I feel there's a portion of my portfolio that I'm very conservative with, but there's a portion of my portfolio that I tend to be more aggressive with because I have time. If I was in my 60s or 70s, my required rate of return may be less, but I'd be less aggressive with some of those investments, which leads into number 4. What is my personal risk assessment and tolerance? How much time do I have? And then the big question for me right now with every asset that I sell is, what am I going to do with that cash? What are my other opportunities? What other businesses do I have to invest in? Where am I buying other projects or developments, or is there more opportunity for that money somewhere else? And that is the question that it comes down to. Should I be buying or selling? What is my current allocation of investments? What are my opportunities? Now, a lot of people don't have the time to really understand what those opportunities look like, and they kind of feel paralyzed in that moment of saying, I feel like I should sell because the market's high. I don't know what the other opportunities are. And that's where we come in, where we're happy to help through Green Group and Savvy Investor, is if you have current investment property, or you have funds that you're looking to invest, and you want to narrow this down to know, should you be selling the asset? Should you be buying? Where should you be buying? That's the service and consultation that we provide free of charge to our clients that are looking to see what they should do. Is we're happy to have that conversation to help you make that determination, because as an investor myself, I love to have those conversations with investors to help them maximize their return on investments. So here's my invitation to you. Be sure to click the link on this page, and there's 2 opportunities. One is if you want to have a one-on-one conversation with me and a consultation of what you should be doing with your current investment assets, what that looks like, what my recommendation is, I'm happy to have that conversation. Two, if you'd like to be invited to our next investor summit where we get down and really learn the conversation of investing, where I give away free of charge my personal investment software that I use to analyze properties, also click the same link. You'll have the option to choose which option or both options that you're interested in. But be sure to continue to follow me because I do follow these markets on a close basis, and I'll continue to update you with the information. And I encourage you to keep investing, keep your eyes on the horizon, and happy investing, and look forward to seeing you at the next event.